Hey everyone, welcome back to the MHP Show podcast. I'm your host, Derek Vickers, and on the MHP Show, we're talking mobile home parks, we're talking operations, we're talking anything that has to do with this asset class. And you know, when I'm doing these podcasts, it's like, dude, should I look at the camera or do I look at like the stuff I'm looking at here? Because maybe we pull up best places. I don't know, man. Maybe you can tell me, right? But welcome to the show. Glad to have you here. Before we get started, I want to talk about our fund. We're actually getting ready to close Fund One here in the near future. And look, if you've got money sitting on the sidelines and sitting in the bank, I know with the war and all this other stuff that's going on and the uncertainty you hear in the news, it's like, oh my God, I don't want to place any capital. And there's a little bit more uncertainty around that. But I got to tell you, like our asset class sort of scoots above this because what remains constant is that there's a shortage of affordable housing. There's even more of a shortage of mobile home parks, and there's a high demand for affordable housing. And so that's why I love what we do, because we actually take these communities and lift them up and we save affordable housing. Because I just saw there was another park in down in Pinellas County in Florida that got here recently got scraped because they're building condos or something on it. So we don't let that happen, right? And so if you've got money sitting on the sidelines, you want to be a part of that and get your money out of the bank where it's literally dying every day, and put your money into a stabilized asset. Well, people say like, well, you're not, I'm too conservative on the projections. Like I've had people tell me that, but like I'm not going to tell you I'm going to get you a 30 IRR. Like people will rather sit on the sidelines rather than put their money in a good deal that'll get them a 15 to 20% IRR, or they'd rather be scared and have it on the sidelines where it's dying, right? And so, look, I'm telling you, once you start getting your money in assets, you get off the hamster wheel because the money keeps growing, right? You're growing with inflation. If you're a high income earner and you're not investing in assets, like you're just on the higher level of the hamster wheel. And how do I know that? Because I used to do that when I was a commission salesperson. Like you were on the hamster wheel. Like let's just call it what it was. And look, if you want to get in an asset that's withstood all all types of economic conditions and uncertainty, mobile home parks is the place you need to go. Right? If you want some cash flow while your money's growing, mobile home parks is the place to go. And look, we can help you out at Victory Capital. If you go to victorycapital.com or you reach out to me on social media, you reach out to my team. We can schedule a meeting with you. I'd love to talk with you because I think this is super important now with the the level of quantitative easing that the Fed did during COVID. It just like blasted the money supply. So your dollars became worth less. We can see that now with inflation, if you believe the numbers that they tell you. But look, I'm not going to keep going on about this because I could. Investing in assets has saved me. And if you haven't done that yet, I'm telling you guys, this real estate stuff and these deals, it's way different than investing in the stock market and investing in anything else. It's just different. Hard assets is the way to go. And some people don't like it because they can't log into the account and see how much your stuff is worth, which I might like to do that or figure out a way to do that, right? Give people real time worth, and I'd have to get them appraised every quarter or something like that. But anyways, I digress. But look, check us out at victorycapital.com. You can reach out to me at Derek at victorycapital.com. You can reach out to investor relations you can reach out to Milton at victorycapital.com. And here we go, man. So today, look, I've gotten questions about this. What are the risk factors with buying a mobile home park? I've done a similar show about this before, but things change and I learn new stuff, right? I don't know everything, right? I do not know everything, and I won't tell you that I do, and I won't pretend that I do. But I learn more and more as I go through these deals, and things you need to look out for, right? When you're buying these things, because I feel like in mobile home parks, and I've never really ventured into any other asset class, but I got to tell you, there's a lot of things you can run into in these damn things. I mean, we have a deal under contract right now, and I mean, the stuff that you run into, it's just it can be pretty wild. But the first thing we'll talk about when we get into today is utilities. That's one that obviously I think people know that the infrastructure can be a nightmare, and whether you're private utilities or public utilities, like this is something you need to look out for. So I'm going to go over like each of the utility setups and just give you kind of the risk about them and what my take is on them, and if I like them or if I don't like them. And I may not hit it all on this, but I'm going to go for it. So if we start with utilities, and you're starting with your water sources, so you can have city water, or you can have well water, which I've learned to actually like well water because it's so cheap to operate. But the well actually carries some risk because you're now the water supplier, which is, some people see it as a risk because you got to like now abide by whatever your health department or environmental agency is with their particular codes and things like that. But you're not mom and pop. You're not the one going in and doing that. So I mean, we've bought parks from people where they do the testing, they go in and take the samples, and they send it, and they drive it in, and they drop it off at the place. That's dumb. Like, you're not going to do that, right? You're going to hire a professional, a licensed professional, a licensed well operator. They've taken classes, they've gotten certification to do this. So they're going to go in and operate the thing for you, right? And so you don't have to deal with that. So that's I like that about a well, because you got to pay that guy about $300 a month. In Florida, it's about $300, $350 a month. Plus, you're going to pay for samples. You have, I believe it's quarterly samples. I think so. Don't quote me on that. I'm just losing my train of thought. But yeah, it's quarterly or annual samples, and then you have triannual samples, which are probably $4 or $5 grand to do those samples. They're sampling more, but nonetheless, uh, it's much cheaper to operate. Right now, the system could go down. I've had one well go out before in a 40-unit community, and I was freaking out. I'm like, how my God, dude, how much is this thing gonna freaking cost? So they had to drill a new well and do all that. It was 30 grand. So I'm like, okay, like, yeah, it sucks. I didn't want to pay that. And people's water was out for, maybe 2 or 3 days. But it wasn't like 30 grand. Like, it's not that, like, we've had much bigger capital expenditure expenses before than that. So what I would say to you is I like the well because it's cheaper to operate. Most people are scared of it, whatever. I mean, yeah, I understand why you are, and I get that. But just in my experience, if you do good, if you take care of them and you do inspections on your wells before you buy them, you're going to be able to mitigate a lot of your risk. But there still is some. Like, we have a system right now that we've had to just, you know, repair little dinky things on it here and there, and it's on a small park, so it is more of a pain in the ass because sometimes we'll be cash flowing really well, and then we have to, 2 grand to fix this, 3 grand to fix this, and so it kind of hurts your cash flow on a small park, But on a larger park, one well is not as a $2,000 or $3,000 expense is not as painful. But yes, the downfall is that something can happen and you have to drill a new one, or something can happen and they won't let you drill a new one. But this is why you go in your due diligence and you see, like, hey, if something happens, is there room for another well? Because we had a park where we had to do this and there was no room for another well, because the well, if you put in a new one, has to be a certain distance away from your sewage system. So if, like, you got septic, you've got treatment plant or whatever, there's certain distances that the well needs to be from these things, and rightfully so. And so you may have a park where there's just no room to do that. And so this is why you got, again, do your due diligence on that stuff and see if it's even feasible. Now, city water, of course, we like, and it sounds great because, it's city water. If the water goes out, we can blame the city, right? Like, so look, I will tell you this, like we had a problem with the park with city water, and it was because of the water lines. We had to replace the water lines. And that was $80,000 because this park was old. The water lines were old. It was in Tampa. It was probably built, um, I don't know, probably in the 50s, dude. It was old, right? It's old. And that's like city water is not perfect, right? Like you can have really crappy water lines that have this buildup on them. And so you can have low water pressure that tenants are going to complain about. And so, look, it's not perfect, is what I'm saying. But of course, I like city water because it's seemingly better on an exit. Because if somebody hears that you have city water, and be like, oh my god, I want to buy this damn thing. So, again, just to reiterate on your water sources here. Just to reiterate on your water sources here, I like the well. I like city water. You got to build back city water. You can build back well. You just have to make sure you're not overcharging for it because you can't profit on that. Another thing I'll throw in here is that, your well is cheap to operate, but even if you have city water and you're billing back for it, you're not going to recapture 100% of it. I mean, you're just not. I mean, I guess you could get the bill every month and then divide it, but I don't think we can do that in some of the markets where we're in because it doesn't. If Susie's, has the water slide out and cleaning her cars and, she's filling up an above ground pool. This is all real, by the way. And this will happen. Everybody else is going to be pissed off because they're paying for Susie's, like party she's having. Right. But anyways, all in all, like I'm not scared of private utilities when it comes to water. Now, when we move on to sewer, I don't mind private utilities in sewer as well. I don't do lagoons because I've never had. I don't want to say I don't do them. I never bought one. I've actually never even looked at a park with a lagoon because they don't have those typically in the areas that we're purchasing in. But I do have wastewater treatment plants. I do have septic. I have, and actually I like septic. So I'll talk about that first. If it's a standard septic system, and it's one tank for 2 homes. Like I don't mind that because like if a tank goes out and the drain field goes out, it's going to be 10 grand or 15 grand to fix. That's fine. Right. Again, you're just going to want to make sure you're going in and doing these inspections and making sure that you are ensuring that if the system is shoddy, you can fix it. We've got a deal under contract right now. We went in, we knew this park was going to be a mess, but we're buying it at a great basis. And the septic system is pretty makeshift. Like it just is. The trailer dog, you guys know what a trailer dog is? Y'all know what a trailer dog is? Maybe you do. Well, a trailer dog is somebody who's, they're one of those guys that sort of lurks around the park. They could maybe live there. They could not live there. They sort of lurk around. They can do everything. They can fix anything. They're the trailer dog, right? So if you know what I'm talking about, the trailer dog is sort of designed this makeshift system. And look, to this guy's credit, it's working right now. But long term, in a year or two, I mean, the thing could blow up at any second, right? And so it's like, hey, how much is this going to cost to fix? One, and two, can we even fix it? Because if the city was going to come in and make us remove homes, then the deal doesn't make sense. If they're going to make us tie in the city water and city sewer, it's going to be $1 million. It's a 40 lot deal. It doesn't make sense, right? We're not getting it that cheap, but it's still pretty cheap. Maybe it would still make sense, but not really, right? I don't want to deal with that project because it's a long, drawn out project, right? And so, we're doing the inspections on this, and you can tie in the city water and city sewer. It's going to be $1 million. You can actually put an entire new system in this thing for 500 grand, or you can fix what's there and make it serviceable for 150 grand. I'm like, yeah, I like that, because the $500,000 fix just doesn't make sense in the numbers, and I don't think we're going to own this park for 10 years anyways. I think the $150,000 fix will be good enough, but you have to decide when you run into that stuff, like, hey, is this worth it? Does it work in my numbers? Right. But again, but this system is a little bit different too. It's more of like, hey, there's a couple large tanks that are running into, I think, 2 large drain fields. So your septic expenses can be more if you have a system like that. But what I was talking about in the beginning is that I like the ones that's one septic tank and one drain per 2 homes, right? It's just, those are the easiest. Those are the easiest, and they're actually really cheap to operate. Like if you pump them, um, all once a year, I mean, it's $400 to pump a tank, 250, $400, depending on how big the tank is. But it's pretty cheap to operate. So, like, actually, in theory, a well and septic park can run actually lower expenses than city water and city sewer, believe it or not, unless it's direct bill, right? If it's direct billed city water and city sewer, yeah, I mean, you're not going to have any other expenses. But I like septic tanks. Now we have an aerobic system on a park, which is essentially all the homes, and simplistic. Well, I'm not a septic expert, but the homes are gravity fed into a few big tanks, right? It's then processed out to a massive drain field. This particular park was 7,500 square feet. We had to replace the whole drain field. 7,500 square feet of drain field was 110 grand, 100 grand, something like that. Not ideal. But if this one drain field with just one tank would have broke, I mean, would have collapsed. It's not that big of a deal, right? If you have the room to put it in, is the one caveat there. We had a park in Tampa where the septics literally hadn't been changed since probably since the damn thing was developed. And the owner, there was literally no drain fields there. People would use the bathroom, tanks would fill up every day. They needed to be pumped like every day, right? Every day. And there was no room. I mean, these are small tanks. There's no room to put them in. So you can't even, although that was, there was one tank per 2 houses or something like that. In this case, there was just no room to put anything else out there and keep it compliant. So I don't mind septic. I like septic. City sewer, of course, we like city sewer, but again, you could run expenses a little bit higher on city sewer because you're not going to recapture all of the cost. Just in my experience, we never do that, right? So, but of course, we like city sewer because everybody else likes city sewer. And on an exit, which we're always thinking about the exit, what I talk about in here is like, okay, if we can get it something that's city water and city sewer, it's great because it looks, it's easier to get rid of. In most cases, some people, I think people are starting to get smarter on the private utilities thing. Now, the other one that's still a wild card for people is the wastewater treatment plant, which I don't mind the wastewater treatment plant, but I will say this, they are a pain in the ass when something happens, right? You just got to be ready for that. Right? And why is it a pain is because you got to deal with now the government agency that's going to help keep you compliant. It's DEP in Florida. And we had one problem facility that just, it wasn't like the whole thing failed. It was just, it had a bunch of knick-knacky little things that ended up costing 70 grand to fix this and fix that and fix this and fix that. And some of these things have these like cinder block tanks, right? That where the sewage is processed before it's put out into the pond. And sometimes that, like, there's seepage out of that tank. And you know how much it costs to seal this thing? I mean, it's probably like, I don't know, it's probably 6x6 or something like that. It's like 25 grand. Right. And the reason you're like, man, it starts to get expensive. And like the reason why you couldn't replace the system because this park was like, there's just nowhere to put it. Right. But, I've learned on these treatment systems is that if you do your proper due diligence, and I've learned what the agencies hate the most, they do not like, yes, some of the seepage stuff that I just talked about, like that can be fixed and it can be costly and it can still be a pain. But what they don't like, what they do not like is when you are going over your flow capacity, right? And this is why this took me a couple years to figure this out. So in Florida and probably in other states too, but Florida is the only place where I have wastewater plants. So this is the only frame of reference that I have. Depending on the park, you're permitted for a certain amount of number of gallons of flow that can go through that system per day. So your operator comes out and they measure the flows because there's a flow meter on the thing. They measure the flows. And let's say your capacity for your is 10,000 gallons per day. It's a relatively big system. One day it's 11,000, next day it's 7, and they take the monthly average and figure it out. If you're over that monthly average, that's when hey, bro, hey, what's going on in there, man? What's going on in there? All right. And they're going to give you some time to solve it. And it could be a couple different things. It could have been the rainy season, right? Because when it rains, there's more flow going through there. It could be that. So that's why when you're going under due diligence in these things, you need to look at your flow readings for the last couple of years, because if it goes up constantly in rainy season, you can feel better about that because it's not necessarily a problem. June and July in Florida, it rains a lot. In May as well. You go look and hey, and the flows tick up in those times, but then it goes back down to a reasonable number. You can feel good about that. We bought a park. The tank is permitted for 10,000 gallons a day, and it's running like 6,000 a day, and it's a 50 lot park. I feel really good about that, right? And even in the rainy season, this park wasn't going over, and so I'm looking at the flows and seeing, okay, this is cool. But if I look at the flows and see, hey, they're going up, right, and they've been up, right? Okay, maybe you got a problem. You got a problem. Maybe you have some infiltration. And you can get with companies to find out if you have infiltration into the system, which is fixable, right? But what is not fixable is just when this system was built. Look, everything's fixable with money, okay? But when this tank was built, like for whatever reason, maybe the capacity was wrong. They built it too small because they were trying to jam it into a small area. I don't really know. I haven't figured that out. Or just engineering standards. They were like, yeah, whatever, just stamp it. It's fine. You got to increase the capacity of the tank. Like if you can't fix it out, if it's not I, if it's not infiltration, any of this shit, they're going to make you expand the tank, or they're going to make you hook the city sewer. And if you can't hook the city sewer, you're out in the middle of nowhere or something. Like it's going to be expensive to expand the tank. You got to make sure you have room to expand, because literally you have to sort of like build out the capacity of the tank, right? I don't know how they figure the capacity, but that's where the cost can start getting a little gnarly with a treatment plant. But again, if you take care of it, you have a great operator that's going out there. They don't scare me as much because I know what to look for when I go out and take a look at these things. So, and look, you just got to do your due diligence on those things. So, okay. With that being said, I hope that helps. Now we're going to electric. Okay. And this is something so I didn't deal with this in Florida. So mostly all electric in Florida is direct build electric. Like we don't deal with it. We're responsible from the electric pole to the house, but not from the pole, to the transformer out to the electric company. That's not us. That's not us. And so I like that, right? So we haven't had to deal with that, but sometimes you deal with master meter electric, right? I don't have a park that's master meter electric, but we've looked at some now. And, again, what I'm finding, it's the same thing, right? A lot of these, it's kind of like the treatment plant. A lot of these systems were built, they're freaking old. The capacity for what they were built for is not built for what it is for today. right? Because most mobile homes should be at least on 100 amps. Like some of these old master meters were like, they were like old RV parks, or they were old, back in the 50s, they had these little 8 wide trailers. It was probably a 50 amp or maybe even less. And so the capacity of these things, as people move other stuff in, as people put a mini split on the front, mini split on the back, window units, and they're pulling so much power, the systems can't handle it. Boom, system shuts down, or it overheats, or something. And then you can have problems, and it can be pretty dangerous. So look, I don't particularly like master meter electric, but we're learning more about them. We backed out on some deals because of the master meter electric. We have one under contract right now where the electric system is a disaster. But the deal is going to be contingent upon that. You just got to get a pro electrical contractor to come and do that. And look, like a lot of these deals, when you're going and looking and stuff and due diligence, you're going to find 100 things wrong. These things are old, right? You're going to find a ton of things that you don't like. But most of the time, it's usually one thing. Like you can deal with stuff we're used to dealing with, like, tree work, doing the roads. We're used to doing, like if we have to replace some sewer line or something, or maybe a septic tank or two or whatever. But this big, massive project stuff, just like the one deal I told you about, and with the septic issue, like the deal is contingent upon, like, hey, me confirming whether this job is going to be 600 grand or it's going to be 100 grand, and then doing the numbers. Like, because if it's 600 grand, we're going to ask for a discount if we want to take it on. Same with the electric system. It's going to cost $1 million. We're not buying the deal. If it's going to cost 100 grand, yeah, we can do that, and it makes sense, right? Because the seller's not going to give me $1 million discount, but somebody's going to have to fix that at some point, right? Somebody's gonna have to fix the septic system at some point. Whether the seller wants to do that or I want to do that, I don't know. So you're just gonna have to determine those things. And look, I could do like a whole thing on just utilities and stuff, and I don't particularly necessarily like or don't like talking about it, but um, it's there. Anyway, so if you have questions about that, just shoot me a message. Another risk that you can run into here is zoning. I'll say zoning and encroachments. I'll talk about these. So zoning, like when you get a park, you want to get a zoning verification letter. Now, when you say that, when you get the zoning verification letter, it's going to be cryptic. Like you're not going to understand it. So you may have to put it in Chat GPT. You're going to try and call somebody at the government office, and you're going to learn this pretty quick. No one's going to want to put anything in writing, right? They're just not. They're just not, because they don't want to be the person that told you something that wasn't correct and whatnot. I mean, just the city people are the city people. But you want to decipher that and make sure that, like we had a park one time that was zoned for RVs, and the guy over time had started putting mobile homes in. So he had like 90% of his park was mobile homes, was only zoned for RVs. Of course, it's fine. Oh, it's been like that forever. Of course it has, right? Of course it has. You've owned it forever, and you've never went in and, kicked out bad people and, increased rents and done all this stuff and, cleaned up the park and pissed people off, because that happens when you clean up the park. Sometimes people get mad, but believe it or not. And when that happens, that's when cities get called and they come in like, oh, well, let's see here. You're not allowed to have these mobile homes here. And depending on how much of a pretending, how excitable he is about his job, he can make your life a living hell. We had this happen in a park. The owner had pulled in park models, which are technically RVs. So we had a guy who was working on their house, a tenant, one day. Well, first of all, we had put in a fence in the front of the park, pulled a permit, did everything correctly. Guy was coming in to inspect the fence, sees a tenant working on the roof of his house, and he's like, huh, let me see if this dude has a permit for this. Do you guys think the tenant? I wish we had some buttons on here. Do you guys think the tenant pulled a permit? Oh, I'm sure. Yeah, I'm sure they did. They definitely pulled a permit, And of course, he looked at it and they didn't pull a permit. And so he comes in. Starts poking around. And it's like, hey, these park models, like this is only zoned mobile home. Long story short, it was a 2-year freaking process, and we ended up having to take 10 homes out of this park. Right now, if we would have gotten the zoning verification letter there, if you look, it's not very clear to say the least. And we could have we could have done more. This was a park that we bought in 2021. I could have done more, but it was a mistake, and obviously we check a little bit harder into this now. I'm not afraid to admit that I made a mistake. So if anybody's in this business and tells you they haven't made a mistake, I don't know what to tell you. I mean, it's just not real to me, at least. But yeah, it ended up being a pain in the ass. Now the deal, because we bought it so well, is going to end up being fine, and it has been fine. But gray hair and all this other pain later is it's just not fun. It's not fun. So you got to check your zoning, right? And you have to get somebody to like really dig into it and figure out what you can do there. And this also goes into like you know encroachments. Like we were looking at a park that like the whole like east side of the park, most of the mobile homes were hanging over the property line into a city roadway. There's no road there, but they could build one there if they were like, hey, we're going to build one here. And so we had to dig and dig and dig a little bit more. And then we found out that like, oh, okay, actually the city's fine with it because the property is actually paying in their property taxes to use that little road part there. That's they're splitting the costs with the property next door and their ability to use that little area there. Right. So not a big deal. The city knows about it, but any other time, like encroachments can we've bought a deal with encroachments before and nothing's happened. But I've heard of people that have purchased deals with encroachments, and it can be, people can try to make you move homes. We've had to move a home before in a park, but if you have a whole park that's encroaching, I mean, it could be a problem at some point. Now, granted, it's been there forever, but it's just something you need to look at. You need to assess all the risks. There's some like you need to be like there's some finessing here, right? There's some finessing when you call the city and talk about this stuff. You don't necessarily want to poke the bear, so you have to learn how to poke the bear to a degree without poking the bear. Right. So, and it's kind of an art form to doing that. You just have to like be smart about it. Okay. So encroachments, and another like thing that I hate the most that would kill a freaking deal for me is that if one person owns 3/4 of the park. Now I love our Lonnie dealers. We have a rule. We typically don't let people have more than like one. But if you buy a park where one guy owns all the homes, no, I do not do that because if you go in and raise the rents, he's gonna be like, no, I'm not paying, and he could technically pull out all of his homes if he wanted to, right? I hate that more than anything. I absolutely hate that, and it can be a big risk for you. So you need to look at that. You need to ask those questions to the seller, right? Who does one person own more than one home? Who are they? Right? Seller didn't tell us on this deal that we had. We dug and found out that there were 5 homes that one person owned. Now 5's not as bad in a 40 couple unit deal, but if you have somebody that owns 50% or even 10 in a 40 unit park, 25%, it's just not like it will eventually cause problems. Like, what if that guy runs into an instance where he can't pay? We inherited a lady in Arizona who owns, I think, 4 or 5 homes, and I mean, I guess it's not that bad in 110 lots. So it's what, 5%? I guess it's not terrible, but she's finally paid, but she was delinquent on 4 homes at one point. Right. So one goes delinquent, then they all tend to go delinquent. And if one goes bad, it's just more risk. It's just more risk. And I just don't like it, like for many obvious reasons. And so that is one thing that I look for. And our team, Doug, they were able to pull up the titles And even for the tenant-owned homes, and got the they were able to get the numbers off the trailers and look up the addresses at this park, and they were able to find out who owned these homes. So look, you got to figure that out because I hate that. I hate that. And that just can be a big risk to you in this. The other thing, another thing I like to touch on that I don't do is flood zones, especially in Florida. You're already asking for it with a hurricane. I like buying inland. I do not like buying in flood zones because it's in a flood zone for a reason. Um, I guess there are some cases maybe where it's not, but I just don't do it. I just don't do it. As much as I look at some of these deals that are in a flood zone, I'm like, dang, man, that's a great deal. I'd love to own that. Now, I will say this. We did partner on the deal that was in a flood zone, but this deal was a irreplaceable deal. You'll never see a deal for this price per pad again. You won't. Most of the stuff in this area is selling for 5, 6, 7x what we paid per pad. So I guess there are certain circumstances, but this is also an area, if this thing got wiped off the face of the earth, the developer would buy it for more than what we paid for it in a heartbeat. But typically I don't like to. I don't do that. That's the only one out of 51 properties that's in a flood zone. Let's see what we have here. Look and see if there's anything I missed. Yeah, I mean, look, the area that your community is in, I'm not as particularly fussed about the crime rate because look, it's a trailer park, dude. I mean, it's not going to be in the best area of town. Like it's just not. Right? But I am fussed about locations that cannot be changed. And what do I mean by that? Well, we had a park in Orlando and you can go to this park. This is the only park I've ever been scared driving through. I mean, legitimately like legit scared. There's like 96 units in. Let me see. Let me look up the let's see. Let me look up the acreage. I think this is it. Let's look this up. We were gonna buy this damn thing too. I gotta look this up. So I gotta give you the real number because it's so insane. Orange County property appraiser. Sorry, I just gotta look at this. I mean, it's just crazy. Okay. Ah, come on. Ah, here we are. Here we are. What's the acreage on this beast? Come on. Well, maybe I can't. Maybe I'm not gonna be able to find it on here. I don't want you guys to. I don't even remember what I was getting at with this now. Oh, we were talking about the area that can't be changed. Okay, we'll continue. Anyways, it's small, dude. It's probably 3. It's probably 3 acres. I would guess, maybe. Dang, man, I'd love to see. I'd love to find this. Let me see. I'm gonna try one more time here. Usually it's on here. Yeah, whatever. But this park is like, one way in and one way out sort of thing. Oh yeah, 4.62 acres. So 4.62 acres. I was wrong. See, I told you I was wrong on the acreage thing. 4.62 acres, 96 units. Yeah. That's it's packed in there, dude. It is packed. And yeah, I mean, look, like this park would have been so hard to go in and change because some of these roads you go into, you drive down, you go in and take a right, and you drive down, you can't even go anywhere. You have to back out. Like you couldn't turn around, even with a small car. Anyway, so this property was just in a terrible area, like that wasn't not even that it was in a terrible area. If the park was just different than it wasn't so compact, and the tenant base that was in there and all the homeless and drugs and prostitution that was in this park, like it wasn't ever going to be changed, right? So like we bought parks in bad areas, but this particular park, there was just something about it that just couldn't be changed. And I didn't feel good about it. There's a lot of parks that we bought in bad areas, but when actually you go into the park, it feels better and it's safer in those parks now. There's like I feel safer in some of our parks than I have walking down the street um, at some of these places before. But just beware of some of that stuff that you can't change. And like this deal a few years ago, maybe it's 4 or 5 years ago now, but it was I think 35 or 40 a pad for 96 units. And even then that was enticing. You're like, dang man, like this is a steal for Orlando. But it was just too much. Maybe we would have turned it around about now, but we would have had to basically kick everybody out and start from scratch. Right. But seemed like too big of a heavy lift at the time. Okay. So look, those are the risks I'm coming up with right now. Look, there's always some others. There's some nuanced things. I mean, another one I would tell you before we go, I talked about the flooding, but drainage issues. If you have bad drainage issues in the park, they can just cause problems because they're very hard to fix. And if you do fix them, it's very expensive. So you got to figure out if you have those. Go to the park when it rains. Go to the park when it rains. Um, Or you can get a kind of a topo map on the park to see what the elevations are. Anyways, guys, thank you guys for watching the MHP show. I hope this helps in your due diligence and your risk factors things. I mean, there's a lot of stuff when it comes to these parks, but these are the ones that really kind of always stick out for me. Like deferred maintenance, we expect that. But there's some stuff like if you have to do a complete overhaul of the utilities, then it becomes a matter of does it make sense with the price? Um, and do you want to deal with that headache of getting an engineer involved and getting it approved and getting the permit and blah 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 blah. So yeah, if I forgot anything, just shoot me an email or shoot me a message on Instagram. Be like, Derek, man, I can't believe you forgot this. Sure, I'd be happy to talk about it on something. So look, again, you just gotta watch it on these things. You got to do your due diligence and know the things to check. We use a third party due diligence company now. They do a great job for us. They get into the weeds. It's expensive. It's not cheap. In the beginning, I wouldn't have been able to afford to do that. So I had to do it on my own. But it's harder for me to get in the weeds like they can get in the weeds because that's all they do. Right? That's all they do. So, anyways, thank you all for watching the MHP show. Look, if you want to be a part of Fund One and get your money off the sidelines and stop letting it get absolutely crushed by inflation, then reach out to us. We'll be happy to talk to you. And we'll see you guys next time on the MHP show. Thank you all for listening. Check us out. Like us on iTunes, Spotify, YouTube. Check me out on social media. I post videos every day. And I was going to leave you with something philosophical again, but I don't have anything right now, man. I don't have anything good right now. I've gotten the weeds of all this utilities and ugh, I'm not floating above the clouds today, but I'll see you guys next week. Thanks for watching the MHP show, victorycapital.com. Peace.